So earlier this year, I said that there wouldn't be a market crash. But turns out I was wrong. There's actually one country that is actively trying to crash its own market. And that's what this video is about. The China stock market bubble, that keeps me up at night because the Hong Kong exchange just dropped 770 points today. Let's go through what's happening right now. So there was a company called China Evergrande, which is one of the largest property developer in China. And right now, it's near bankruptcy because it has to repay various debts over time. And the China real estate market is not looking so good. Now, normally, real estate is a fantastic industry. But investing in China, there's quite a few regulations that has been rolled out recently. From restricting mortgages on second homes to capping the debt to equity ratio for property development companies. Now, China is also regulating other industries in the name of common prosperity, which I'll talk more about in a bit. And I'm really talking about the technology regulations. Now, when you think about China Evergrande, it is more than just a simple real estate developer. It is actually connected to a lot of other industries in the market as well. We're talking about insurance in China, banks in China, financial institutions. They're all heavily invested in the real estate markets. And if China Evergrande crashes, a lot of other industries will crash along with it. And that's exactly what you're seeing in the Hong Kong stock market. Now, when you think about China, there are 2 to 3 major industries that support the economic GDP. One is real estate, banking, insurance, and another one is technology. Now, with the recent tighter regulation, the 2 biggest technology companies, Alibaba and Tencent, are already down a lot. Now, while I don't see Alibaba and Tencent going down much further than where we are today, the problem is whether the crash in China will lead to an overall market collapse in the world. Now, some of the things you want to think about here are, to date, China has not opened its borders, so in order for you to get in, you need to be a Chinese citizen and quarantine for 2 weeks. Now, this also reduces the amount of imports to China, which also reduces a lot of international trade activity. So if you have been paying attention to some of my earlier videos for shipping container prices, it has actually gone up from 2K to 10K, so almost 5 times. Now, with China slowing down its growth significantly because the real estate sector, insurance, banking, technology are all impacted, I think at this stage, you should probably check your portfolio to see if you have any companies that are exposed to China crash. And you'll want to contain that exposure, reduce it if possible. Now, in terms of the technology industry, I don't think it's going to crash that much more because it is already on 30, 40, if not 50% discount. So it's really the rest of the China market. So I think so far, China hasn't experienced a bubble for a very long time. So if China handles the Evergrande situation poorly, it can actually turn into a catastrophic crash. So that's really the purpose of this video, is to give you a heads up. So you need to be very careful if you're planning to invest in the China market.